Good morning, everybody.
And welcome everybody. Weekly spread. Jack and Norman will get started right away. Today, a shocking admission from this lifelong options seller. Let's hear what Jack has to share with us today.
Yeah.
Well, shocking admission. I had it as damaging
It's
admission.
both.
This is a reputation. This could be a reputation, adjuster here. I mean, you're all about, listen, I mean, we've talked so much offline. I mean, I think as you get older, you realize that you appreciate the importance of dividend and just slow, sure income, which is what, that's your star on your billboard. That's the shooting star. You're all about that. It's all about taking little pieces, and just letting it all add up. Now that, it's kind of, older people, we don't have maybe all of that time. So it would seem that maybe that's not.
You're not lumping me in that group, are you?
No, it's just me. So
Okay.
you'll get to my age, but the idea of it happens much faster than others. If you don't have to keep overcoming losses and get back to even, that builds up really quickly. Okay, so yeah, thanks for the wave, and I know you agree with me. I'm kind of making you smile here. Then I'm going to give it to you because yes, all of that's good, but what I had as damaging admission, and they've called it shocking. Either way, what's going on? Tell us about. I mean, I don't know it completely either yet, but when somebody said you're talking about buying puts and buying calls at certain times naked, I'm saying hold it, and I checked the spelling of your name and the pronunciation, and so what's going on? Tell us what this shocking, disorienting, damaging stuff is.
Okay, so I lost a lot of money buying options, and then I quit buying options. And my very first option I ever bought was in November, I think, of '85. And me and another guy, I was working at Dean Witter, and me and another guy who I thought was smarter than me, he picked a stock and analyzed it and researched it, and we went halves. We both went halves on buying some calls on this stock. And I thought, I'm going to go back to Gary, Indiana, being a big rich guy, big know-it-all, smart guy, 23 years old, Long story short, we lost it all. And I went back home with my tail between my legs, and it was brutal. I planned on flying back, flying into Chicago and having my dad pick me up. And I ended up taking a bus to Gary instead. And that didn't stop me. I think I also told you the story where my first couple weeks in the brokerage firm, a guy passed out, fainted, fell flat on his face, didn't even put his hands out to break his fall, just smashed his face. And it turns out he was buying options, and a lot of people, just buying them and losing money. And then I went to lunch with an old friend of mine that owned a brokerage firm I worked for. And he said his buddy from the CBOE was coming in to Boulder, and we'd pick me up and we'd go to lunch. And I asked the guy, he comes in a limo. Nobody rides around in a limo in Boulder. I don't know if you've ever been to Boulder, but nobody drives or rides in a limo.
You can't go vertical.
It's not like that there. Anyway, he shows up, big, long, stretched limo, and I'm in there with him, and we're going to lunch. And, I'm fascinated to talk to a guy on the CBOE. What do you do? He's there because he put his kid through CU, as a out-of-state student. It's very expensive. Anyway, he's there from Chicago, and he says, Jack, I make all my money selling options to the options buyers, and that was it. And we didn't talk too much about business anymore, but that got me thinking. I've lost so much money trying to buy calls, and I've been suckered in to buying the calls because nothing on the planet gives you as big a bang for your buck as a call option or a put option when you're right about the underlying stock and it makes a big move. Nothing's going to give you that kind of return. But getting it is nearly impossible. You know, when I did a lot of statistical research, even with a new friend at the CBOE, and the odds are just terrible on buying options. Most option buyers lose money. We all know that. There's debates whether it's 70 or 90% lose. And, you know, the stock needs to make a big move. So even if you're right about the underlying stock, you could still lose money in options. So just all that I wanted to do buying options left me with such a bad taste in my mouth. I aggressively switched to the sell side 20 years ago. And I've been doing that ever since. And people say that I don't make money. I take money, you know, because I'm looking at the printed prices on the options chains, and they're saying right there what they'll give you for selling it. So I sell options and take the money.
When you say sell options, you're not buying puts. You're selling a put or selling a call and taking the premium that other people are paying.
Right. Sell to open instead of buy to open. And what's crazy about that is you would think that you'd only get paid when you sell an option if the trade worked out. But the way it works is because options are a zero-sum game between just two people. As soon as a buyer buys an option, his money hits your account instantly, whether the trade works out or not, you get paid instantly. So that was a huge factor for me doing that. And then statistically watching these options expire worthless, that just got me going. Now, the downside to that is that it takes, you know, some decent capital because the returns are lower. For example, with my weekly spread, I try to shoot for 5 to 6% per week. And I think that's amazing, you know, 14% a month, whatever. I think that's phenomenal. I've seen some that have been 10%, and I think that's great. And, you know, people still say, hey, what about buying a call instead of buying a stock when it comes to trading? And I always would say, you know, ever since I got slapped around really hard, I needed a compelling reason to buy a call. I mean, a real compelling reason. No, not like the research I got from that idiot that I went halves with on Dean Witter. I mean, I needed some compelling research, and I've never seen it in my life. Right? I don't care who came from, what hedge fund, and what smart guy, I wouldn't buy a call or a put. Occasionally, rarely, and even when I did, it was, you know, maybe 1 to 2% of my account. But something happened recently, and I was blown away with the statistics. So I'm here to say that I'm going to be buying calls and I'm going to be buying puts on certain stocks.
I'm leaving. I've had enough. This better be good. This better be good.
Oh man, yeah, it's good. The data pool we have is so good that I couldn't ignore it. And we've got some really great guys at Trading Pub, you know, and really great team of guys. These younger guys, they're into the computer in a way that I can't do it. And I'm not interested in doing it. I don't have a supercomputer like they have in Jacksonville and all that stuff. But they did some testing on a strategy I'm already using. It's a type of credit spread. It's an income trade. We've got these stocks that we know that are going to go up on certain dates. They've gone up every year on a specific date for 10 years in a row. That's the most compelling data I've ever seen in my life. Then
It's kind of like a season. It's not seasonal, but it's exact dates that repeat themselves.
It's more of an anomaly. I don't even think when we looked at this, I don't even think that the other Wall Street firms realize that they're all piling into the same stocks at the same time on I'm talking the exact same calendar date for 10 years in a row. I don't think they're realizing they're doing it. And what we found out was that if we took the exact same trade we were already doing, so we went back, for example, we had 12 trades, great trades with this thing called the income calendar, where I'm putting on this spread that might last 2 weeks, but it's an income trade. And if we get 14%, 10%, 20%, I'm loving that. And everybody that's in it loves it. Then the young guys, smart guys at Trading Pub, they said, hey, Jack, look at this. We take the same trade you gave but we're buying a call, and I won't tell you how far out of the money or what the expiration is. It just, they're just buying the exact same call on the exact same setup I had on an income trade. And they're averaging 175%. And one of them was at 600%. And, a lot of them were at two. There was, I don't think there was any of them that weren't less than a triple digit winner. And the very first one they ran out of the thing was a loser. And, most guys would quit and say, hey, this
Always
doesn't work.
happens. That always
Happens. You get burned one time and you're done with it, right? But they didn't quit and they kept going. And I'm glad they did, because they had other losers in there too. There's going to be losers, but winners and losers combined, the average trade worked out to 175%. So for the first time in my life, since I was young and wet behind the ears and green and ignorant, and used money that I couldn't afford to lose, I did every single thing wrong you could do with options, buying them. Now with this data pool, maybe once a week, I'm going to have a great opportunity to buy a call that's worth buying. In meaning that, I'm targeting 200% on these calls. So I haven't really become super greedy with it. I'm only going to do a small, maybe 3 contracts, 5 contracts, 10 contracts at a time. But I'm first time in maybe, I don't know how long, 30 years.
When you say impressive data, are you talking about, 90 out of 100, 80 out of 100, or 8 out of 10, or what?
They had about a 70 something percent rate. But we had one trade, this is the other thing that I hate about options, is that even when I do rarely buy a put or a call, I'm willing to risk 100% of what I put in, which is why I'm always going to use a smaller amount than I would on a more high probability trade. Because when you buy a put or a call, no matter what, the odds are stacked against you. So I'm buying a, smaller amount of money, but this data itself was too good to ignore. And my jaw really just dropped when they did an audit, right? We got this guy Conrad in Germany, and he's got some software. I don't even know if you could get it in the States, but it can go back and look at every tick an option price made. It's hard to get charts on option.
I was going to just say, you can't get that.
You can't get it. He's got a way to do it. And then he's got a way, if you give him a specific time of day, on a day, he can just tell you what the options prices were priced at. And that's how we get our audits. We got to comply with a lot of rules, and we have our stuff audited and to publish a track record. And he's the best at it, although can be a real pain in the what, because he's no
compliance guy is a pain.
He's not really a compliance guy.
Straight and narrow, you got
straight, But he did the full audit on it. And it was amazing because they're taking the exact same trades I already issued an income trade on, and said, look what would happen if you bought this specific call option instead, or in addition to the income trade. And just the stats, the statistics, there's no emotion. It's not like I've seen where one guy would get really hot at buying options for maybe a month and a half or so, and then he'll go ice cold, because it didn't really have a system. It was kind of just discretionary, and he was good at it being discretionary. But what we're using now, it's an algorithm really, and it doesn't have any emotion on it, right? So it just tells you these are the stats, and then it leaves us to find which strike price and expiration to use on that. And it's just been amazing, totally amazing. So with options too, I'm willing to risk 20, 50, 75%, even 100% if it works out that way, and you got to be prepared for that big loss going in, which is why you never want to use money you can't afford to lose. And you never want to put a stop in after you've bought an option either. So I just use a mental stop and say, hey, if this thing is down, depending upon the situation, if it's already down 50% or 75%, I'll cut my loss and try to save some money. But the real damaging admission is the big income guy who always thought people were fools for buying calls and puts is now buying calls and puts again.
Well, let me get back to this. For you out there, in Cincinnati, I used to run a restaurant called Prime and Wine. Anybody out there remember Prime and Wine? It was a salad bar place. And somebody who was there, one of the waiters there, he said to me, "Hey, this coming Tuesday," and it was in the middle of nothing. It was like August. It was, I think it was in the summer. And he says, "This Tuesday we're going to be jammed." I say, well, I'm looking, I'm thinking, what is it? Labor Day too early for that too? What's happening? He says, well, every Tuesday, every second Tuesday of April, of August, whatever the date was, we get jammed. I don't know why. There's no reason why. And I found out that anybody in the restaurant business for a long period of time knows this and looks back on their calendar, how much business they've done on specific days, and they know these days. Seems to be no reason, no why or wherefore, but you're prepared and you're into it. With this, all this data that you've uncovered or others have uncovered on your behalf, why do you think? I mean, this is the first I'm hearing about it. So, what do you think that the reason is for it being a specific day? I mean, is it something coming out? Are they doing earnings? Or?
Well, we looked at all that. It's never been about news. You couldn't have news on the same day. We looked at every possible thing that would happen, and we couldn't see any reason. Garrett Baldwin, a guy I really admire, you may know him, he called it an anomaly. And what we found was that Wall Street is at the exact same time, exact same date, is buying shares of this stock like through a window in time. One date, it might go on for 8 days or whatever. And I thought at first, I've been on Wall Street, and they talk a lot of shit, but they don't tell each other what they're doing. You know what I mean? And so I thought there's no way that it's like Wall Street firms are teaming up on this stock and buying it. We were trying to find that through Edgar. We were trying to say, hey, we could determine when Wall Street was kind of buying these stocks all at the same time. We just jump on and piggyback it. But they didn't realize they were doing it even. I don't believe there's any coincidence to it. I don't know why it happens like that. And anymore, I don't want to know why. I'll just lose sleep over wondering why. It's the weirdest thing I ever seen in my life. First of all, when they came up with that data, this was prior to me buying puts and calls. They found this data pool, finding like a needle in a haystack of finding stocks that go up on the exact same date for 10 years in a row. I thought they were BSing me, thought let's mess around with Jack before he goes on vacation and tell him we got this treasure trove of data and see what he does, So they sent it to me, and I thought this is unbelievable. And then I called my main guy, and I said, hey, what, give me all the background on this. And he did. And that data pool is just unbelievable. So now I have the most compelling reason, not human related, not coming from someone I respect or a guy that's done it, just this computer, not thinking, it's aggregated this data pool and it runs this algorithm. And it's an anomaly, kind of like in your restaurant business. There's no way to really figure out why is it on this Tuesday that everybody's coming in. You could have thought, well, if it's Friday, everybody got paid,
Right.
or the weather or whatever. But if you go back and you look at why does everybody come in on that specific Tuesday every month or every year, it's like there's no way to figure that out, so you just got to let that part of it go and just go with what which would be planning on that Tuesday to have a lot of people.
And the underlying truth is statistics don't lie. And,
No.
you can try to figure it out. You're never going to get a clear answer, because if you start that one, when you start and the first one was a loser, all of a sudden it'll all fall apart if you don't stick to the truth of the data. And I think that's where people, especially from a mental and emotional standpoint, which I'm into, as soon as they get 1 or 2 losses, all of a sudden everything is falling apart. It's not, when I have an argument with my wife, which doesn't happen, thank God, too often, my relationship is not breaking up. I don't get threats of divorce,
Yeah.
Um, but you got to, you got to roll with the punches. I guess so. I mean, and the way you do that is, again, paying attention to the risk, paying attention to the amount of risk that you're willing to take, and be ready if it happens on an outside chance that you get 5 or 6 losers out of the next 8 trades, where your markets, where it's going like this, and you say, well, I'm getting all, you start giving it labels. I'm getting chopped up. Why I got to wait till the chop is over. And when you wait till the chop is over, of course, that's the next one, is where the big winner would have come. So you either believe in something in trading or you don't. And I think that middle ground is really what kills traders. And I think that's really what brought me to options in the early days. I have a different reason for spending more time recently with futures, but options are forgiving. It forgives you in the very short term. Market can look like it's going the wrong direction, and a futures trader sees it break a particular moving average. All of a sudden, they're getting there. An option trader has time, whether it's a day or a week or a month. They've got time to see things work out. So I think the more an instrument is forgiving, the more you can stick to your guns about something. So I think there is some reason for even new traders to look at options, even though it may sound confusing, even though this premium value seems to go up sometimes without reason, or go down without reason, or the market goes up and nothing happens to the premium. Don't try to figure it out. That's it. Don't try to figure it out. Just go with the data.
Yeah.
And that's really where you come in.
I've even had people say, I bought this call. Why would someone sell it to me?
To make money, right?
Oh man, don't go down that rabbit hole. I must be doing something wrong if a market maker is willing to sell me this call option at this price. I shouldn't have bought it. They buy it, they immediately regret it because somebody sold it to them and they think that person is smarter than them. But I want to ask you another question. I see a lot of people give up. And why do you think people would give up after one trade or 2 or 3 trades?
Well, there are pretty deep reasons for it, but it's actually fairly easy to explain. What happens is all of the past winning and losing they've done outside the arena of trading, and even inside, if they tried to buy a stock here and there, so on, whatever they tried. What happens is when they don't have success because they don't have the belief system, or they haven't consulted the data. When I coach traders, I tell them, check yesterday's action, prove to yourself, show yourself that your system works. And if it didn't work yesterday, go back 2 or 3 days. Over those 3 days, you're going to see if you followed your trading plan, you would have done well. So you have a plan. That's all you have, and you stick to it. So I think that people who come in and lose their first trade and stop, they're a victim of a subconscious, what they call a neural net, which is comprised of all the input that you've been feeding it, all the neural pathways, really thought energy that you've created. In other words, when you have a thought, well, I'm not sure this is for me, or, I'm not sure, Norman jokes around too much. I'm not sure he's really serious. Whatever doubts that you have that things are not going to work, that creates a neural net that your subconscious does not doubt that this is right for you. Whatever you feed it is right for you. Okay. And so when a trade comes up and they lose, all of a sudden that feeds that neural net. And when another trade comes up, they're afraid to take it because the neural net is telling you, hey, be careful, you've been losing, So the way you reverse that is to feed your mind, is to shut off CNBC and feed your mind what you need. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. Short meditations, that's what we offer. But the idea is that you can change the mindset. And those that are short-term in their belief about their trading plan are destined to failure. So you got to do your homework. I mean, they either have to rely on you to do the homework, as you've just talked about in statistics, in the statistics that you got, and you've even relied on somebody who has a deeper way of analyzing this data. So this is what we know to do. We know let's look at the data. The data doesn't lie. As deep as I can go. The bet 1 month is not good enough. 2 months, I got to see it all, And I think that the traders they take it as a hobby. Let's try trading. They don't
Okay,
frame it as a
right.
business. I wish Joe Ross, the late Joe Ross, was here with us because he was very good at framing your trading as a business. And I think that once you do that, you start taking every facet more seriously, you know?
And being committed and not jumping around from system to system, you
Right.
know? Yeah, good stuff. Yeah. I also think a lot of it is when people quit early is I talk about the amount of money, and it's really not the amount of money a person trades with, it's the type of money. I always thought with options, it's money that I could just hold up, take a lighter to it, watch it burn and not cry about it. But if you're using money you can't afford to lose, then any strategy is going to not be right for that, and people don't realize that I'm trading with more than I should, or, I took a big loss, and then they're mentally ruined, for a month because they lost 10 grand or whatever. And they shouldn't have been, they had that money in the market to begin with. So,
Well,
yeah.
scared money is, of course, is never going to win. But even somebody who doesn't have confidence in their process, in the process that they've laid out for themselves, and you can tell that by the fact that they keep jumping off it, or they keep changing the rules. You should never change your trading plan during the trading day. I mean, that's like rule number one. You got to run it the way you've tested it. And
Yeah.
I mean, how many days have I started out with a few losing trades and at the end got it all back and more because I stuck to the plan,
Yeah. Yeah.
And you can do things to if you start off big, I've learned to then trade small to keep what I got. See, you learn how to manage winning once you start winning a little bit more,
Yeah.
And
the other thing I did here with this call buy-in is I'm only using the money that I've already made from income strategies. They're smaller gains, but I let them pile up and pile. And I use a lot more money in those income strategies because they have lower risk than buying calls or puts. So I got no problem putting 10, 20, 50, 100 grand into a trade or more. I got no problem doing that. But on an options trade, there's no way I'd do that. I'd limit it to, 5
well, again,
grand.
it's a measure. It's a measure of, what is my risk? What is the, yes, you can have great, you can have great stats, but you got to watch out for that 1 time in 10. And you can't set yourself up to get killed. You can't initiate a trade where any result can be too deep of a loss. I mean, you just can't do that, no matter how good it looks.
Yeah.
You
got to be prepared for all of it. You can't, as I used to tell guys in our old boxing gym, you can't get in the ring and not expect to not get a bloody nose. You can't stop boxing and look at your hands when you're bleeding, like, whoa, what's going on? That's part of it, right? So losing is as much a part of trading as is winning. The difference is just in how you handle it emotionally.
I got to hear more about the boxing. You can see this broken nose. That was my 3-week experience in boxing.
Indianapolis, Indiana. I'll never forget that. They used to have these police athletic leagues in these different cities. And we had a boxing club in Lafayette, Indiana, when I was at Purdue. And we'd travel around to these other towns and box their guys in the police athletic league, match them up with weights, similar weight. And this happened in Indianapolis. So this kid got so lucky. That was the whole thing. He got me with a right cross and broke it real good. And,
middleweight? Was he middleweight?
Yeah, I started off at welter and went up to middle. This happened when I was at welterweight, but yeah, he got me good. And the thing is, I didn't even realize it happened. It's like my coach was like, and the other trainer were like, oh man, he's bleeding like a stuck pig. I never quit boxing. I didn't even know it happened. I didn't even feel it. I just, all that happened after that is I really want to just lay him out. But he ended up winning, and I got a hell of a broken nose from it. And I had my sister set it the next day, where you re-crack it. Yeah. And she didn't do it good enough. And
well, you're not going to win any trade, And here I just thought you were pointing at me.
No.
These boxes are in different ways. Sometimes I have to, if I look at this way, I'm actually looking away from you. I haven't figured it out. Maybe David can help me with that.
Yeah, when you move left, I'm moving right. I don't know why that is, but
right.
No, funny stuff.
It's just boxing the lefties. That's what hurt me.
Yeah, or a guy that can change. fought one dude who changed it up, right? And these were just 3 3-minute rounds. But even after 3 minutes, I thought my lungs were
keeping your lead foot on the outside. That was, I'm thinking about that, and I'm not thinking about when my hands are doing it and I'm getting hit.
Yeah. I don't know how
his face. You don't want to hit this face. Come on.
He got me so lucky. I just think it was pure luck, that punch, just pure luck. And it kind of really pissed me off. But I learned next time not to get emotional when I'm in the ring. Just take what he gives me. Kind of like trading. I just react to what's happening out there,
I think it's good. It's good practice. It's getting up off the mat. I mean, I've heard Tyson as a motivational speaker talk about it, but I was a wrestler in University of Cincinnati, so I switched over. But that's another discussion. David, do we have any final questions? I think we've pretty much answered them.
Yes, absolutely. Thank you. Let's see, let's start from the bottom and work our way up. Is the webinar being recorded? Yes, absolutely. It will be recorded, or you can go to the link I'm going to post in the chat. This currently will send you into this room, so don't go there now. But later today, just save this and you can go there, or check your email. We'll be sending it out by email. There's one from Jay. Jay asks, will you sell the money from the income strategy to fund the call or put buy?
Yeah. Yeah. A lot of times I do that. And it really depends on how much dry powder I have in my account. I don't like to ever be 100% fully positioned except in my IRA, which is dividend stocks. But I always keep a little dry powder in my regular trading account. So I'll either use a little bit of that to buy a call, or I'll just use the income from an income strategy. That's like free money to me. I'm already using the house's money on that. So I like to do that too. Yeah.
Excellent. Nathan, just a comment here. For me, the monster trade style is actually easier mentally, not expecting 90% win rate. So when I take a loss, okay, no big deal, especially with the audit being average, average wins 10 times bigger than the losses.
Yeah. And that gives me confidence in the data. I'm confident in the data more than I'm confident in a human being, giving me a trading pick. So we just got really good data, and you can just do a covered call strategy and bring in income, and then use the money even from a covered call to buy a put or a call on a different stock. So there's all kind of ways to get the money to buy the call option, and you might want to just buy 1 or 2 or 3. And then as you get your confidence built up, you can move up and start buying, 10 lot or more. But it's really important just to start off small and have an exit plan. I don't even go into a restaurant without having an exit strategy. So every trade you get into, you have to know how and when you're going to get out when you get in. So yeah, you can find the money from other premium strategies to buy a put or a call, or a few of them.
Excellent. We have one, looks like here, for Norman. You said the options owner has time, but what about the loss of value due to time erosion?
Well, and that always gets factored in, but I think if I'm correct from the trading that I've seen you do, you don't hold these very long when you trade. So erosion of time becomes less of a factor. But again, erosion of time is, the less time you need for something to happen, and when you have exact dates like you're talking about, you don't need a lot of time, because if you need a lot of time, you were wrong. So it's, you can have multiple contracts rather than spending that money buying time. So
yeah, and the other thing about time is that time decay really kicks in the last week of an option's expiration. So we might buy an option today with an expiration 30 to 40 days out, but we'll still sell this option like within 8 days. Right. So we're not using expiration to help us. Right. We're taking that time decay out. Like you say, we're just in for a short period of time. There's other strategies where I need that expiration date as part of the deal. I need that time decay to start kicking in, because I want that option to expire worthless, out of the money. And
when you're selling it, you want to keep what you got when you sold it.
Yeah. When I'm buying it, I'm going to give myself plenty of time in terms of the expiration on the option, but I'm going to sell it way before that. I'm not going to stay in it for more than like 16 days. Even that is a long
Yeah,
time.
the last part of the option time, that's where the action happens, but it's also a function of the strike price that you've got.
Yeah.
At the money is going to pretty much move with whatever the market is. A little
Yeah.
bit out of the money, that's where it's going to make a big difference. It's way out of the money and you have little time. You got to do a lot to make that premium move up there. So it really is a matter of time, of strike price, and of volatility. So you've got a number of factors that are dealing with options, and which is why I have also moved to more shorter term options as I've graduated my thinking, because it eliminates some of those factors, you know.
Yeah. No, I love using time decay as part of the strategy with my weekly spreads. Like tomorrow, you know, I've got a bunch of puts I sold on AVGO down around 870. And as long as AVGO is above 870, these options are going to expire totally worthless. And I'll keep 100% of the net credit that I got. Whereas when I'm buying a call, I want to be able to sell that and let it still have enough time value for the next buyer, you know, so he still has 2 weeks left, because a lot of people don't want to buy those shorter.
One quick question. When the market gets close to the expiration date and you're looking to retain 100% of it, is there a point where, I mean, if you've got 90% of the premium that is already dissipated into your account by having sell it, I mean, why take is there a point that you say, hey, let's just take 90% and move on?
I do that only if there's something that I didn't expect that happened during the week. And sometimes that happens. And what I've also done, I had a really horrible experience with Schwab getting bought in on some CMG puts when they were still way out of the money, and Schwab took action and bought me in. The options were $7 out of the money, and it was 20 minutes before the close on Friday, and their risk department determined that that was just too close, and they took action and bought me in. And that, man, I tell you, I almost lost my voice on the phone with them. We were really going at it. I'm surprised they didn't kick me out of Schwab for the things I said to them, but that happens. So what I've been doing recently is, if it's really volatile or crazy, let's say I made 25 cents on a net credit on Tuesday, then on Friday, I might spend 1 or 2 cents getting out of the short side of the spread, right? Just to guarantee that it won't be put to me after hours or Saturday or whatever. You know, like I mentioned, I do this a lot on NVIDIA, and I like to close these trades out for a penny or two on Friday, because what people don't understand is, even though the options market and the stock market closes at 4 o'clock on Friday, the CBOE has until 11:39 on Saturday to do an assignment. So you know, we've had a situation where after hours, a stock went from 400 to 350, and everybody I knew that was in it, not me, got the stock put to them at 350, and the next day the stock, Monday, even opened even lower. So these guys just had the stock shoved at them, where they could have just closed out that position for a penny or two on Friday and avoided all that risk. So I haven't had an assignment like that, but I did have one time Schwab took a move on me, and I'm sure they regret it now after what I said, but I never got that hot in my life. I did not want them touching, making a move. I was sitting right there watching. I was about to close it out with 10:10. I like to wait till there's like a minute left in the market on Friday to close that position. But when I saw them make that move, I'm in the cabin, right? Cell phone doesn't work. Nothing works. I got to drive down to town and to make a call. And he starts off by saying, "Now, Mr. Carter, you know, I was using some pretty heavy language." And he says, we got to keep this professional. And I'm trying to help you. And I say, well, you tell me how it's professional that you make a move how on my account. You think that's professional for you to make a trade on my account that I didn't, you know, you do this without my permission. So let's just, we need to rewind this for conversation. And what you did is not professional at all, which is the reason I'm calling, you know.
See, I'm too nice. You know, I'm too nice. My wife said, you need to be more like my friend Eddie, who, you know,
If I could have reached through the phone and grabbed that guy by the throat, I would have.
Well, you probably have a whole new stream of income calling for people. You know, hey,
God.
Jack, can you call Schwab for me? And
I lost my mind, man. I lost my mind. But that happened. So, you know, I was talking to the risk manager at Tasty Trade, and they're kind of known for, you know, letting things go and not taking a move on guys. But I talked to their risk management department, and in that case, that he says they would have done the exact same thing. And I say, I just can't believe these are $7 out of the money with 15 minutes left to go. And I can't believe you'd take a move, you know, you'd make a move on me on that. And he said they would have done that too. So
I'm with you, Stephen, to close the spread. Let's take this one last question. It says, what did you do to keep from assignment on the spread? Bought which back? Does that make sense?
Yeah, it makes sense. So like, so what happens is, like, let's say on AVGO, the stock was like 900 and some dollars. I sell an 870 put, right? I bring in income right with that. And then I'll buy an 867.50 put, right? And I get more money for the 870 put that I sold than I spend on buying the 867.50 put.
So you got a net credit.
So I got a net credit. So now going into the close, I just have to buy back that short put. I don't really need to sell the put that I'm long to avoid assignment, right? So I don't need to unwind the whole trade. But lately what I've been doing, and I don't know if I've been lucky or what, but when they're like 1 penny bid, 2 pennies ask, you know, I'll pay the 2 cents to close out the short put. And then just for the heck of it, I'll throw out the put that I'm long for sale at 2 cents. And oftentimes I'll get that, which means I got out of the trade flat and ended up keeping my entire 100% net credit that I got in the beginning, because I sold both options for the exact same price right before the close, right? But you really just got to close out the short side.
There's your answer, JC.
All right. Thank you, folks. Excellent, excellent stuff. I'll just say one last thing before you go. We have wanted to keep this show pure and make it fully editorial. So we haven't specifically mentioned what service this is. There will be no link to go buy it, none of that. But a lot of people in chat have already guessed. Seems like you have a lot of fans, Jack, and they know your service as well. That they've guessed that it's Monster Trades, and that's absolutely it. But again, we will not be posting a link here to go buy it, any of that. If you're interested in that, just keep an eye on your email. I'm sure you're getting messages about Monster Trades and all the results it's had so far.
Yeah, we're not doing any pitching or any selling on this show, as DA mentioned when he created it and produced it, that there would be no selling. And I like that. I love it that we're not doing any pitching.
We're not very good at it anyway. So
we're terrible at it, and we're not reading any PowerPoints. I hate.
You know, and it's going to be up. It's going to be up to David to find Monster Mash and either close with that next time or open with it. But one of the two. It was a graveyard smash, as I understand it.
It was a graveyard smash. It was. I almost fell over when I saw that data. You know, and It's funny. Like, they found that data pool, and they were really exercising it and massaging it and saying, Jack, you know, what would you do if you knew we had a stock that went up every year on the exact same date? And I said, I'd use that as an asset to create an income trade. That's how I roll. And it wasn't until later that one of the guys said, well, what would you do if you saw this data? Would you ever buy a call or a put on that? And I said, yeah, I wouldn't do it with as much capital as I'm doing on the income side, but I'm back.
And I probably wouldn't tell anybody about it at first.
Yeah.
Fantastic. Thank you, folks. One quick question, actually. Somebody says 20-day max holding time on Monster Trade. Is it calendar days or trading days?
Calendar
days. All right.
It's a month.
Perfect. That's it, folks. I'm going to stick around, recap what we've talked about, what we've learned today. But Jack, Norman, thank you so much for joining us. And
great seeing you, Jack. I'll see you next week.
Yeah, we will see you guys next week.
Yeah. All right. And we got to get into the naked put thing next week. So write it down, folks. We were going to talk about that this week, but I had a damaging admission to make.
That's right. And damaging it was.
Buying calls. I can't believe I said that.
Right.
Adios, egos.
You can mute that out, I think.
All right. Mute that out. Yeah. All right. See you next week.
See you guys.
See you guys. All right. So this week, what did we learn? Jack, early in his career, bought a call option, went halfsies with his stockbroker buddy. They had to go back to Indiana with their tail between their legs because that call option did not work out and they did not follow the golden rule, only trade with money that you can lose. So that turned Jack into a lifelong options seller. He says, I don't make money, I take money. And that's just what selling options is to him, because it is such a safe way to trade. The wins are smaller, but they are much more consistent. In fact, one of his services, I think, has a 96% or greater win rate. Again, smaller wins, but they're more consistent. And I'll tell you what, that's the way I like to go. You should think of an options chain not just as a list of prices that the option will cost you. It's also a list of prices that people will pay you to sell them that call or put. So if you change your mentality, you can become an option seller and start bringing in income from the markets. Also, he says you get paid instantly. You don't have to wait till the end of this. As soon as you sell that call or put, you get paid for it. One other thing he told us, every time an option expires worthless, an option seller on the other side is laughing all the way to the bank. What else did he bring us? The income guy who said never to buy calls or puts is doing it now under very specific circumstances. I think that's probably the most important thing. Everyone hears the first part where Jack says he's now buying calls or puts, but it's under very specific circumstances. So don't go out, don't go hog wild, especially in this market, the way it is right now. Again, if you're interested in that, keep an eye on your email. I'm sure you're getting emails about monster trades, and that's where Jack covers all of the stuff he talked about today in detail, specific picks and plays. Also, one very important thing, the only money he's using to place these trades came from income strategies. That they're smaller gains, as I said before, but he lets them pile up and then he's playing with house money. So it's a much safer way to go about it rather than taking my hard-earned money and putting that up on buying options. Sell some options, pile up some money, and then you can start buying, again, under very specific circumstances. One other thing, you can't get in the ring and not expect to get a bloody nose. The difference is how you handle it. So remember, losing, he said, losing is as important in trading as winning. It's all about how you handle it. All right, I think that's it. Let's see if there's anything in the chat before we go. People are asking if there's going to be a replay. Yes, absolutely. There will be a replay. I'm going to drop that link in the chat right now, but if you click it right now, it's going to take you right back into this room. So don't click it now, just copy it, paste it, bookmark it, or just stay tuned to your email. We're going to be sending out the replay later this evening or this afternoon. All right, that link is, whoops, hang on one second. That link is in your chat right now. Gregory, will Jack have monthly updates to review the trades? I do not know. I do not know. If you want, you can email support@jackcartertrading.com. I'll put that in the chat. Support@jackcartertrading.com. And someone will be able to get an answer from Jack on that. I am not certain, but if it's like his other services, I'm sure he will. There's no reason he wouldn't. Great music, Ian. Thank you. Thank you. I appreciate that. I'm a big fan of music, and I'm glad to hear that that you guys can hear it and that you are appreciative of it. Renee, can you sell a call or put using a stop loss rather than the spread? Listen, that's a trading question. I won't be able to answer that. I'll leave that for Jack. If you can save it for next week, I'll put it in my list here for next week as well, and see if Jack can answer that for us. Anything else in the chat? Jody, Jack, do you have more exact dates for 3 trades for 3 stocks this month? All right, again, a trading question. I'm going to save that for next week. I'm pasting that into my notepad right now. I'm not able to answer that, but perhaps Jack will be able to answer that next week. Thank you, folks. I'm going to shut down the chat. Stay tuned to your email for the replay, and also don't forget, put it on your calendar every Thursday, noon Eastern time. We get together and see you guys later.